Kaustubh Pawaskar, Deputy VP Research of Sharekhan by BNP Paribas joins it. Kaustubh, good morning. Thanks for joining us. Kaustubh, you've tracked this sector for decades. You know, at the start of the year, we talked about how rural demand would come in and support the sector. While that's happening, urban consumption has given way. Volumes have declined across the board. And I think the joke in the sector is that either you're -1 or you're +5 in terms of revenue, right? That's pretty much been the range. What do you feel? Do you feel the worst is behind the sector and the second half is set to get better?
Good morning and good morning to all my viewers. I guess I spoke on your channel that this quarter the revenue growth would be in single digit, with volume growth expected to be in low to mid single digit, and margins are expected to be lower, and because of the input cost inflation, and on YY basis, PAT growth will be lower compared to what the revenue growth will be. I think this trend would continue in the quarters ahead. We expect margins to remain lower because raw material price inflation is there. However, on the revenue front, we might expect revenue growth to inch up a bit, mainly because of the fact that the companies would be taking price increase in their portfolio, because inflation has gone up substantially. If you take the case of raw tea prices, it has gone almost by 25%. Palm oil prices have gone up in double digits. So company has to take price increase, and it will be across the board. It will, even the loose and unbranded players, they have to take price because they cannot sustain in the market. So in this scenario, when raw material prices goes up, price increases are there in the market, large companies tend to gain share because the pricing premium between the large and small reduces, and that is the time where FMCG companies, branded players, gain market share. So that is what we have been hearing from most of the management, in the conference call. However, in terms of demand, rural is gradually picking up. It is not a significant uptick in demand. Urban is moderating, but there is a sense that even rural demand should see a further pickup, considering the good monsoon. Agriculture output is expected to be good, so that should help rural demand to continue to see a good run. Urban demand is expected to be quite stable in the quarters, right? So in terms of demand, it is rural to pick up. Urban would remain more or less stable or little moderated, and that is how we are expecting revenue growth to be better compared to what it was in H1, slightly driven up by price increases what the companies are planning to take.
Right. Kaustubh, the other concern in this industry is the rising raw material prices. We've seen that for tea, we've seen that for salt. I did talk to Tata Consumer, and they said that they don't really aggressively hike prices or have the ability to pass on the price hike, because this is a price-sensitive industry, and once you lose a customer, bringing them back becomes a challenge. Do you feel like, given that, margins will continue to remain under pressure, stay this way at best, or decline maybe in the second half of the year?
Certainly. So we don't expect price increases in line with what the commodity inflation is. There will be definitely a gap between the price, the commodity inflation, and the price increase what the companies will be taking, because it is going to happen in a gradual manner. And because of that, I believe the margins would continue to remain under pressure in the quarters ahead. I think once there is a clear stability in the raw material prices, we should expect raw material pricing stabilizing, and then we should expect gradual improvement. But over the next 2 quarters, that scenario seems to be a little difficult. We should expect margins to remain lower. We should expect PAT growth to be lower compared to the revenue growth. Revenue growth could be in high single digit to low double digit, but PAT growth would be lower compared to what the revenue growth is, mainly because of the low margins.
Kaustubh, just one question from my end. Good morning, Neeraj here. We know that there is slack out there. Where is it that you found a hint of optimism? Because for example, GCPL may not have passed on the entire cost, and therefore maybe there are some margin levers ahead or something else. I saw Bikaji delivering a half-decent quarter too. Where is the outlier here this quarter thus far?
See, if you look at GCPL's performance, I think it was much better compared to what the other FMCG companies was, especially at the India business level. They achieved high single-digit volume growth, and that is mainly because of the fact that whatever strategic initiatives they have done in past few quarters in terms of reformulating their HI business, not taking price increases in the soaps, but gradually focusing on gradually increasing it, launching, getting into the high growth categories such as liquid detergents. I think that is helping GCPL, and they have seen an excellent set of volume growth of 7% compared to what the other FMCG companies have done in this quarter. Yet there are a lot of companies yet to come out with the result, but whatever companies results have announced, if we compare to that, GCPL India business performance was good. They also seen a pressure on the margins, but in terms of outlook, they are expecting volume growth to further improve. They are expecting revenue growth to get back into the double-digit growth trajectory, and that is, I think, a good commentary. And the companies who have done a lot of launches, focusing on expanding reach in the rural market, expanding their distribution in the domestic as well as international market, I think these companies are doing much better compared to what the other companies are doing. And I think GCPL, Varun Beverages is classic example of it, where these companies are not doing good only in domestic market, but even their international businesses are doing good, especially for GCPL. We have seen sharp improvement in the EBITDA margins of the Africa business, and that is expected to continue. Gradually, we should start seeing pickup in the revenue growth of the Africa business. So these are some of the drivers which will help GCPL, to achieve consistent growth in the coming years. So I think they have done well, and we believe that the consistency is going to be there in terms of GCPL in the quarters ahead. Same is the case with Varun Beverages because of the distribution expansion. They are also the international business they have recently acquired are doing extremely well. Integration is happening well. I think even Varun Beverages will do well in the quarters ahead.
GCPL and Varun Beverages is what Kaustubh likes, constructive on both those stocks from the medium term. Global business also for both those companies looking good.